Will HMRC disqualify me for unpaid company tax debt? Well, essentially, usually the answer to that question really must be no, because HMRC does not run around bringing disqualification proceedings against company directors in respect of unpaid tax debts and so on. If unpaid tax debts lead to the company going into liquidation, administration, etc., of an insolvent kind, then basically, certainly, it is a standard procedure that the liquidator has to do a report on the conduct of the directors in the case of an insolvent liquidation, for example, to the Insolvency Service. It is then essentially down to the Insolvency Service to determine whether or not they think that the director's conduct is sufficiently unfit to merit disqualification in the public interest to effectively protect the public. That's the general overriding test that we're talking about here. It is not something that essentially is dealt with direct by HMRC in respect of tax debt. It's certainly the case that in the pre-COVID finance era, a very substantial proportion of director disqualification proceedings initiated by the Insolvency Service were in relation to Crown, i.e. HMRC debt such as PAYE, VAT, corporation tax, etc. That has essentially come down a little bit in recent years because director disqualifications have very much been dominated by COVID finance issues such as exaggerated turnover on bounce back loans, use of bounce back loans that were done improperly, not for the economic benefit of the business, and things of that sort. But nevertheless, trading to the detriment of the Crown is still a material issue from the point of view of director disqualification, but not something that is initiated by HMRC, generally speaking. Questions, queries, concerns, give us a shout. Winner Insolvency, inside out.